Dollar index has seen a major crash last week. It has crashed below 104 levels and it has moved or closed the week below 103.5 as well. Now, what to expect? Can we expect it to move towards 103 and 102 levels, or is it going to bounce back from the current levels? Which position you should take trading dollar index and the associated currencies and commodities. We will see with the help of charts and indicators. Towards the end, I will give you the trading levels and strategy. Watch out till the. If you are not subscribed to the channel, subscribe to the channel to get the latest updates. Let's start. First, let's have a look at the 4-hour chart. See, if you track the movement here, the drop, the retracement, then the drop, the retracement, and it has been continuing in this bearish channel here. If you look at the bottom should be somewhere here at around 103, and the long-term bottom is at 102 levels. This zone between 103 and 102 is a great support zone for the DXY. Now, if you notice, see it has formed a double top here on the daily charts at 104.2, and since then we have seen this major drop. Now, also it has breached the support levels here and formed lower lows. But if you notice the 4-hour charts, the bearishness has diminished with every passing candle. Thus, the possibility of the DXY to retrace a little on the upside exists. How far? That, see, 104.2 is the zone where we have the maximum resistance for the index here. And if it stays beyond 104.2, that is the time you can say that the bulls might try to take over, and then 105, 106 levels can be achieved. Also on the 4-hour chart, see the bottom here at 103 and 102 is going to be a stronger support levels. Coming to the, now if you look at the daily charts, see the drop, retracement, drop, and after retracing here, triple three candles getting resistance from the same zone at 104, 104.2, and see the two candles forming higher lows, flat top. This candle gave a breakout. Also, this candle closed at lows. The possibility of it to move further low towards 103 or 102 levels exists very strong. And 103 and 102 is a great support zone for the DX. Now, if you look at, see previously 104 here, the support zone, then now 103 and 102 zone, the next support zone. This is where the DXY will get the maximum support and a possibility of a bounce back will exist strong. Also, one must notice that after this strong bullish move, we have seen this forming this flag formation, and it is still to be treated as bullish as long as 102 is not breached. Coming to the weekly. Now look at weekly charts. The top was formed here, first bearish candle, then a slight retracement, then this massive bearish candle here, and it has erased the gains from almost like last 8-10 weeks here. And if you notice here, you can see first support here at 103 where it has earlier acted as a resistance or a support in the same zone, and then at 102. So I will definitely watch out for, if the next week it starts on a bearish note, breaks below 103.2, 103 zone, then we can expect it to move towards 102. Now look at the monthly chart. On the monthly charts, after consolidating here, we have seen the dollar breaking out, and last 3 months we have seen good bullish momentum. Now this month has erased all the gains here. It has come towards the support levels, and probably this could be the bottom which it is looking forward for the month of November, and then we may see a little retracement from the current levels. So 103 levels, something you should watch out for. Beyond this, possibly we can expect a very good recovery towards 105 as well. Thus next week is going to be crucial, where we can expect the DXY to achieve the bottom, and we can expect it to bounce back as well strongly. Also, yes, it has nullified all the gains and it is still yielding higher lows, higher highs. Now let's have a look with the help of indicators. Indicators on the monthly charts, moving average is running parallel, running divergent, and are still to be treated bullish. Prices were too much divergent from the moving average. It has come down towards the support levels, and the 20 period right now sitting at around 103 should be a good support for the coming week. The monthly stochastic, which has reached overbought levels, is now trying to cool down a bit. And that is why we can see this red candle. Now look at MACD. Now MACD on the monthly charts I have mentioned several times earlier. In my monthly review for the dollar index, I have mentioned that I have shared that. See, this crossover has come after or achieving the highs and at a greater heights. Now, after the crossover, we have just seen it trading with bearishness. It has converged a bit. Now, after the convergence, it is starting to diverge. In the month beginning, I had mentioned that the DXY is supposed to uh, bring the crash here, and that is what has happened. Now, it is starting to diverge. It has the potential for it to continue on the downside for a little while from here. RSI is looking downside as well. Coming down to the weekly, on the weekly charts, the moving average is crossed over here. Traded with divergence, this crossover is a bullish crossover. It has now closed the week below the 50 period moving average. Not a good indication, but yes, right now it is still in the bullish zone. The 100 period at sitting at 102 should be a good support. The stochastic has fallen to the oversold levels. In the recent past, whenever we have seen the DXY staying towards the bottom, it has always tried to show a stronger recovery. Now look at the weekly charts, MACD here. See, after forming the triple bottom here, it has seen a good rise. It is now trying to. Now remember, it has formed the bottom. It has tried to rise. It has converged here. It has not crossed over, and it has still scope for it to give fewer, more greener candles from the current levels. The possibility is there because see this rise after that a sharper drop, and now it is just converging. And the chances of a crossover is what I will look forward to because after the crossover, we can see it retracing a little again before rising. RSI looking downwards, trying to trade bearish. Coming to the daily. Likewise, on the daily charts, important part is it has come towards the bottom of the Bollinger Bands. On the daily charts, there is a crossover between the moving averages 20 and 50, which is happening after a long, long time. And this crossover is happening at 105 levels. Yes, this is a bearish cross here. We have to be watchful. Also, the prices are too much divergent from the moving average. It can converge a little before looking forward to the further down move here. Yes, a little convergence can be expected. If it stays beyond 104.2, we can see it rising towards 105 levels as well. The stochastic has come back to oversold levels. The MACD has seen a strong bearish move. It has hit a bottom here from where the rise has started, and a possible recovery from current levels can be expected. Thus, as we discussed that it may find the bottom in the coming week and we can see a recovery in the coming week itself. RSI hitting the bottom here. Coming to 4 hour. Now look at 4 hour charts here also. See retracement towards the moving average. Again divergent. It can retrace towards the moving average. 104, 104.2 levels you should watch out for. Greater resistance exists here. Stochastic oversold. MACD has hit a bottom. It has tried to cross over but failed to do so. It is again crossing over for sell. RSI is at bottom again. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategy for you for next week so that you can trade profitably. And before I provide you the trading levels and strategy, if you want to learn this art of trading, you can join my mentorship batch. The 27th batch starts on 20th of November. Couple of seats are still available. Remember, after this the next batch is going to be, that is the 28th batch, is going to be scheduled in the new year only, in the year 2024. So do not miss this 50-60 days of profits. Equip yourself with the tools, techniques and strategies which can help you trade confidently. Reach out to me for more details. Now you can also register by visiting the place www.forexfunda.com. This is my own platform. This is much more in offering, but the mentorship batch details are available on the front page. By clicking on the tab, you will find the timings, the details, the curriculum, the services, and yes, the payment options are also available. Also, you can register for the upcoming webinar where we are going to review the weekly forecast, and also I'll be taking your questions this coming Sunday. This platform has much more to offer, be it the economic calendar, be it the charts. You can search for the live charts from across the globe, and yes, you can schedule a call with me along with the, yes, the next offering, which is the discussions forum. So do visit the platform forexfunda.com. And yes, if you want to just trade as per the signals, you can join my Telegram signals group. Reach out to me via Telegram or email for more details on. Now we have seen the charts and time to give you the trading levels. Now see, if you see it is staying beyond 103.6, you can buy, but then 103.95, 104.2. Now this is the zone it needs to break past by. If it stays above 104.2, you can say the next milestone is towards 104.5, and then I will look forward to 105 levels here. This is the first milestone, 105, 105.5 levels, and this is going to be the next major resistance, staying above 104.2 levels. Beyond this, sky is the limit, though chances are less that it is going to break past by 106 levels, but these are markets, we have to keep everything in check. Yes, if it stays beyond 104, the bulls will try to take over. Beyond 105, 105.5, complete bullishness, complete reversal can be seen. Now on the downside, where to sell? I will recommend you to sell here. If you see it is staying at 103.3 levels itself, below this you can expect 103.12, 102.91, and then 102.8. Now as lower it goes, the stronger the support will be there, and it can reverse any point of time. Below 102.2 is 8 is where little more bearishness can prevail, where we can look forward to 102.5 and 102. Now this complete zone between 102 and 103 has greater support for net dollar index, and it can possibly bounce back and show a very good recovery. Below 102 levels is where the bears will be taking over for 101, 100 and below. Take your trades accordingly. Trade with a stop loss and a trailing stop loss. It can see a possible bottom and then show a stronger recovery. That is what is the expectation. Trade accordingly. Do like, share, subscribe and comment. Join my mentorship batch, join my signals channel, join my telegram group, and yes, you can be part of my webinar as well. All the links are mentioned in the channel and video description. Do visit the page forexfunda.com. Do watch the daily updates on major global markets and commodities. Thank you very much. Have a great profitable trading week ahead. Thank you.